Hi everybody and welcome to 5 Minute Crypto, and in this episode we're going to be talking about Beyond the Dip. Now this episode is brought to you by Bitget, where you can hear from the founders, builders, investors and traders as we discuss all things crypto in just around 5 minutes, which is amazing. Let's get into today's episode. I want to introduce Chris Regan. Chris Regan is the founder or co-founder of Cheeky Crypto, that is a leading cryptocurrency news and education company. You can find them over on YouTube, and he is absolutely passionate about helping people learning about cryptocurrency and supporting lowering the barrier of entry. Now, Chris has a huge background in sales, and I cannot wait to get stuck into today's questions. Welcome, Chris.
Hi, Jamie. Thanks for having me.
It's an absolute pleasure. Let's get straight into it. Now, for newcomers, can you briefly explain what it means when we refer to the bottom?
So I guess if we use Bitcoin as an example, we're really referring to like the lowest point reached by a cryptocurrency during a specific period of time. It represents, I guess, the point where the cryptocurrency stops declining in price and starts to rebound in essence.
I mean, that's really interesting. So what are some of the key indicators that suggest a currency or a token may be approaching its bottom?
I think there's a few. I'd bucket it up into sort of your technical indications or indicators, fundamental indicators, I guess sentiment and even historic comparisons as well. So if we just look at the technical indicators, you've got your RSI, your MACD, your OBV, which is one that a lot of people don't tend to talk about. The on balance volume measures obviously buying and selling pressure by analyzing the volume changes, which I think is a really unique one. But I'm more about like the fundamentals, network activity, transaction volume, and active addresses, kind of the stuff that I look at. Obviously, we have a team of people looking at different aspects. I look at more of the fundamental aspects of things, whereas my partner Nick, at Cheeky Crypto, he looks at more of the technical analysis with the TA staff that we have.
I mean, it's really interesting. You touched on my next question in what you just said around historical data. How does it actually play a role in predicting a bottom for a specific cryptocurrency? Have you been successful with it? Maybe can you touch on that a little bit more?
Yeah, I mean, we don't look at one indicator solely on its own. We tend to look at various different indicators. Like we just mentioned, like 4 buckets of different types of indicators. So we don't look at them, solely on their own. But yeah, you can see, I guess the market cycles. You've got the historical data where it identifies patterns, support and resistant levels, which I think is really important. And I guess the formation of different patterns that you've seen historically leading to the bottom. I think if you couple that with historical data in other sectors as well, the stock market, for example, or you could look at precious metals like gold, and you can see, I guess, some of the things that are happening fundamentally playing out. We use the ETFs for, spot ETFs for Bitcoin, for example. If we look at gold and look at what happened once they had the spot ETF or the ETF and look at the reaction, you can kind of use that historical data to sort of predict, what's going to happen next, which I think is really useful in, I guess, partnership with looking at TA and other indicators.
Let's talk about market sentiment. How can that help determine whether we're at a top or we're at a bottom? How does that make you, or help you or aid you to make an informed decision about it?
Well, I think I'm sat here in a bit of a unique position. Obviously, we've got all the analytics from Google for the YouTube channel, right, for example, which does help us immensely when we look at the number of views. So, for example, at the moment, views are down massively. Search volume is down, tremendously. And this is a really big sign that we're getting ever so close to that bottom, right? And then you would obviously look at the media and look at the types of, articles that are being written. Are they positive? Are they negative? And you only have to scroll through, crypto Twitter or X these days to kind of get a feel for whether people are positive about the market or negative about the market. Definitely helps.
I know we've met many times in person, and you talk a lot around this, don't you? And the way that people feel and the way that people trade. And I know you're probably, in my opinion, one of the most detailed when it comes to these kind of things. So I was really keen to see what you thought about that. The final question today, Chris, because these are 5-minute podcasts, very exciting, is in the realm of crypto trading analysis. What common mistakes do traders make when they are trying to predict that bottom?
Yeah, again, like there's probably about 11 that I could highlight. So I guess ignoring the fundamental factors when it comes to the market, I think that's quite a big one. A lot of people are solely focused on just a few indicators, mainly the technical analysis aspect of things, and they forget about the fundamental analysis. Obviously, not to rely on just a single indicator is another one. I think a lot of mistakes are made there. Timing the market perfectly. There are so many people trying to time the bottom. I'm not going to say it's impossible, because I think it is possible, but very few people actually manage to do it. And I think that you'd be better off just getting a good price rather than trying to catch the absolute bottom. Dollar cost averaging, for an example, if you're looking to get a good position. Ignoring risk management, again, is a huge mistake that a lot of people make. There's so many horror stories, particularly around FTX, for example, where some fantastic traders that we know, they managed to trade impeccably over quite a substantial period of time, making over $1 million, but they left it all on that one exchange, which just happened to be FTX, and they lost all of their capital. So risk management is a really important aspect that a lot of people make mistakes with. Emotional trading, selling at the wrong times, overthinking things, overconfidence, again with the emotional trading aspect of things, ignoring historical data, again, not looking at other markets, following, I guess, experts or YouTubers and not sort of coupling that with your own research, panic selling, at the bottom and stuff like that. I think those are probably the most common mistakes that I see people making.
Well, this is 5-minute crypto podcasts, but as you can tell, Chris is an absolute whirlwind of knowledge. If you want to go and check out Chris and Cheeky Crypto, all of the links are beneath this podcast. Please go and check them out. Great friends of Bitget, great friends of mine personally, doing some fantastic stuff. Thank you so much for joining us today, Chris. Just a reminder, 5-minute crypto Beyond the Dip is brought to you by Bitget, where you can hear from founders, builders, investors, and of course traders as we discuss all things crypto in just 5 minutes. Thanks again, Chris.
Yeah, thanks for having me.